or what the bank was doing.
Yeah.
So that's unclear. In just a few minutes, we're going to be speaking to Jordan Fabian, the White House reporter for Bloomberg News, all about banning transaction, the U.S. that is, with the Russian central bank and the wealth fund. So we'll talk more about that. A couple more things, Carol, that I found really interesting. He said that volatility is not the economy, speaking about the volatility in the stock market.
Yeah, exactly. And he did say, though, inevitably we will have a lot of market volatility, which is something we've certainly seen a lot this year. Anyway, great interview. Go to Bloomberg.com or check it out on the Bloomberg terminal for that entire conversation. Right now, though, we've got to get back to the markets and get a check on that. Let's head on over to Doug Krisner.
Hey, Carol, markets are really struggling to adjust to a new round of sanctions against Russia. In the latest move, you kind of alluded to this, the Biden administration is banning American people and companies from doing business with the Bank of Russia, as well as the Russian National Wealth Fund and the Ministry of Finance as well. So we have a lot of weakness in Russian bonds as the market prepares for the possibility that Moscow could default on its debt for the first time since 1998. And the cost of buying derivatives as a way of insuring against that possible default, that price has soared. We're also seeing a haven bid in U.S. sovereign debt, 10-year Treasury down more than 11 basis points in yield at 1.84%, a 2-year lower by more than 12 basis points at 1.44. So the market is really reassessing how these geopolitical developments will impact the Fed's thinking. Dow Industrial Average weaker by 1.6%. In the broader market, we have weakness in real estate shares leading the S&P down 1.4%. NASDAQ comp is only off about 0.9% at the moment. A lot of volatility in the crude oil space. Obviously, a chief concern is the possibility of Russian flows being disrupted. WTI in New York trading higher by 5% right now at 96.20. Much stronger dollar and a stronger yen as well. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, well, the U.S. taking another step against Russia, you know that, following its now 5-day-old invasion of Ukraine. We heard President Biden's administration earlier today banning U.S. people and companies from doing business with the Bank of Russia, the Russian National Wealth Fund, and the Ministry of Finance. But then we just heard also from Jamie Dimon, Ed Hammond, talking with him about SWIFT specifically, which is that messaging system used among the global financial community.
Yeah, billions of messages sent each year using the SWIFT system. Jordan Fabian is Bloomberg News White House reporter. He joins us on the phone from Washington, D.C. Jordan, where are we with the United States in the world, or I shouldn't say the entire world, because not every country has done this, but the U.S. banning transactions with the Russian Central Bank, with the Wealth Fund, and to what extent can businesses actually do business with Russia right now?
Well, the Biden administration's goal is certainly to make it difficult, if not impossible, for that to happen. I think by targeting the central bank in the way that they have, I mean, that's really something that, you know, even the administration themselves said they weren't even considering doing as early as last week. So, you know, they're clearly frustrated, I think, by the fact that the initial sanctions didn't convince Putin to pull out of Ukraine. So now they're unleashing some of the harshest measures they can to try and get him to reconsider that position. But now, as you pointed out, it's going to take the cooperation of allies and countries around the world to take similar steps to try and cut off Russia's economy.
But what did you make of, I think both Tim and myself, Jordan, kind of sat up straighter a little bit when JP Morgan's CEO and chairman, Jamie Dimon, just speaking with our Ed Hammond, saying that there are a lot of workarounds for SWIFT. And we know the financial system and how you do business is complicated. There are lots of avenues. So how should we read a comment like that? Or how would you read it as you continue to report on this situation?
Well, first of all, I mean, I think he's right. There are alternatives, like you can use telephone or fax machine even. There's also been talk about a possible alternative to SWIFT cropping up that, you know, possibly, you know, China would be involved in that with Russia. And so he's right that they can get around it. But I think that's why U.S. officials have stressed that, you know, these central bank sanctions are perhaps even more meaningful than SWIFT, even though SWIFT has captured a lot of the public's attention over the past week or so, because that would, I mean, essentially what they're trying to do is take all of these foreign reserves that Russia has and prevent the Kremlin from using it to skirt around these sanctions. So the view of the Biden administration right now is that that's the most important step they can take.
Kriti Gupta, who's the markets correspondent here at Bloomberg, our colleague Jordan, wrote this email this morning to us all that was really helpful and talked about some American companies that have exposure to Russia, McDonald's, for example, Coca-Cola, Mondelez International. Are these companies able to continue to do business in those countries right now? What is the status of that? And what would the Biden administration like to see?
Well, it's a really good question, Tim, and I think it's hard to tell company by company what they can and can't do. But what you're seeing, I think, are companies deciding that the uncertainty is too great and they want to pull back. I mean, look at what BP did by exiting its stake in Rosneft.
Yeah.
I think Shell Oil announced today that it's getting out of its partnership with Gazprom. And so these companies, even if they're not specifically banned by sanctions from doing certain things, especially in the energy sector, they just might determine the risk is too great because the U.S. might ratchet up even more. And so we just want to get out of doing business in Russia. And that would obviously be put a lot of pressure on the Kremlin to try and keep the Russian economy afloat.
Jordan, international business, global business is a funny thing. I mean, how much of this is because of where we are right now, and how much of this could change in another week? In other words, the sanctions come off. I mean, how do you have any foresight or thought about how this plays longer term? Excuse me.
I mean, it's a really good question. Biden administration officials haven't given any indication they plan to take the foot off the gas when it comes to the sanctions. That they would only be looked to increasing penalties. And to your point, it is, I think, for businesses, what they want is certainty, right? That they're going to be able to operate in certain markets. And so when there's so much uncertainty, we saw the S&P go down today. We saw, obviously there's the ruble really hitting record lows. And so it's just going to cause chaos. And I think, again, a lot of these international companies are just going to decide it's not worth it to do business there right now. And it takes time for them to move. So, we might not see if the U.S. snaps back sanctions are necessarily going to open up their doors again next week, because who knows what's going to happen next with regard to Ukraine and the sanctions situation.
Well, I'm so glad you brought that up, Jordan, because that's exactly what I was wondering. Is this the type of thing that, the actual public outcry from Americans would be too much for some companies to actually be doing business or being connected with Russia right now, or even in the near future?
I mean, there is certainly something to that. A good example of that is state governors and state officials in the United States trying to pull Russian-themed vodka off the shelves of their stores. And that just shows the depth of the anti-Russian sentiment right now among the public, at least the American public, and I know the public in many European countries as well. So it does become possibly a brand issue when these certain companies were operating in Russia. I mean, I think a lot of the reason BP pulled out of their Rosneft stake is because they were receiving a ton of pressure from the UK government to do so. So public pressure only seems to be increasing and hardening against the Kremlin, at least in the West.
Yeah, and we'll certainly have to see how long that public pressure continues, Carol.
Well, I think about different pressure points that we've seen over the last couple of years.
Yeah.
What is it that
has stuck?
Right.
Think about January 6th and the donations that companies make to politicians who supported, overthrowing the results of the election.
Middle East.
Yeah.
China.
Those companies went back
to
actually making those donations.
Jordan Fabian, Bloomberg News White House reporter, on the phone from Washington, D.C. You are listening to Bloomberg Business Week. Carol Master, Tim Stanovic. We are Bloomberg.
from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, folks, getting off to a very busy Monday, no doubt about it. Carol Master along with Tim Stenovec live in our Interactive Broker studio. Hey, coming up, I don't know, I was like all in on Ukraine and Russia, but don't forget Warren Buffett over the weekend.
Yeah, Saturday to be specific. Fortunately, Kat Jaglinski was all over that. She's finance reporter for Bloomberg News. She's going to be joining us in just a few minutes to go over everything that we learned about Warren Buffett's Berkshire Hathaway and infrastructure.
Yeah, kind of a traditional play.
Yeah.
We'll get to that in just a moment. Back to you, though, Doug Krisner with a check on your top business headlines. Hey, Doug.
The war in Ukraine has triggered a new series of sanctions against Russia, and in this latest round, the Biden administration is now banning American people and companies from doing business with the central bank, that's the Bank of Russia, along with the Russian National Wealth Fund, Sovereign Wealth Fund, and the Ministry of Finance. Yesterday, you'll remember that half of the reserves held by the central bank were frozen by Western governments. Now, these measures seem to have triggered a financial crisis in Russia. Earlier in the day, markets struggled to price the ruble, the currency now weaker against the dollar by 30%. And here are some of the moves that we had in trading of Russian equities in the London session. Sberbank down 74%, Gazprom off 53%, Lukoil down 40%, and Rosneft down 40%. Now here in the States, the VanEck Russia ETF is down 30%, and we have shares in the iShares MCI Russia capped ETF down 28%. So there is a lot of negativity in the markets, an aversion toward risk, and not surprisingly, weakness in U.S. equities. With the Dow down 1.7%, we've got the S&P lower by 1.5%, and the NASDAQ composite weaker by 1%. A move into safe havens, including U.S. sovereign debt, a 10-year Treasury at 184, a 2-year at 143, a much stronger dollar, much stronger yen as well. The yen right now is stronger against the greenback by 0.6%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Carol Master, Tim Stenovec here in our Interactive Broker studio. And joining us on the phone in New York City is Kat Jaglinski, who, man, there's a lot going on over the weekend.
She works a lot of weekends.
She does, courtesy of Warren Buffett and Berkshire Hathaway, because Mr. Buffett putting out his annual letter to shareholders this past weekend.
Kat, we are grateful to have you with us, and we're grateful that you worked on Saturday and probably throughout the weekend dissecting.
Do you get a comp day for this? No, we'll talk about that later.
I do want to talk about big takeaways, though. Infrastructure might, the growth plan, potentially a little succession discussion, or maybe not. Let's dive into it, though, with Kat Jaglinski. Kat, so what do we mean when you say infrastructure assets? What are we talking about here?
Well, I think one of the interesting parts that Buffett has increasingly started to put in these letters is how much Berkshire really owns of infrastructure, like property and plants. And he gave us an updated figure. It was $158 billion at the end of last year. And I think it really is interesting because it really speaks to how Berkshire's changed. You know, people really think of Berkshire, and Buffett said this himself, as a collection sometimes of financial assets, and yet it's actually really become this industrial behemoth. And that's really underscored by the $158 billion in infrastructure assets. I think that speaks to the fact, too, that Berkshire can actually really earn some pretty good returns by reinvesting its own money in its businesses, such as the railroad and the energy business, which are always going to be kind of steady operations for Berkshire. And so, yeah, you might not have, you know, the crazy new retailers that Berkshire's snapping up all the time, but you will have sort of these steady and giant companies.
Hey, Kat, so is this a Warren Buffett play, or is this a play by Todd and Ted?
So I would say the infrastructure play is definitely, you know, pieced together by Warren, and partially because it, you know, really harkens back to the purchase of the energy business and the purchase of the railroad, both of which was kind of a Buffett play. And I think it really speaks to the fact that, you know, that, yeah, he's reshaped the company over many years. And, you know, he even joked a little bit, sometimes not intentionally, but it's kind of built out into a company that is, yes, more industrial focused than it ever has been. And in that way, it becomes, you know, kind of a steady operation for even during bumps in the economy.
Okay, I want to get to succession stuff because there was kind of a rare mention of succession in this letter. His likely successor, Greg Abel. What did we learn about succession in the letter, and why was it kind of rare to hear from Warren Buffett about that?
Well, so Warren disclosed last year after a slip-up from Charlie Munger that Greg Abel was the top pick, and he's never actually named who was going to be the top pick when he stepped down. So that was huge news last year. And while we didn't get any sense of the timing of when it might occur, what we did get is we got a whole little letter from Greg Abel, and it was focused on sustainability, so kind of a one-topic letter. But I think it was really important because not only was Buffett willing to cede some page space to Greg Abel, which is kind of key because investors increasingly need to be familiar with him and his ways of thinking, but it was addressing a topic that's really going to be important for Greg Abel going forward. I mean, obviously climate change has gathered, a lot of attention in more recent years. But if you're taking over as a CEO of a really big company, one that includes a railroad and an energy business and insurance, aka many businesses that are going to be affected by climate change and sustainability issues, you're going to have a good argument for how your company is handling it. And I think that was kind of key for investors. They got a sense of Greg Abel, and they got to hear from him in the annual letter, which is rare.
Kat, I think it's so cool that he actually highlighted that, considering this weekend we're seeing alternative energy stocks kind of on a tear as a result of the Russian invasion into Ukraine, and it sounds like Europe is kind of rethinking its exposure, and maybe this is a push more quickly to alternative energy as a result, as everybody kind of rethinks where they're getting their energy from, and their exposure. The other thing I think was interesting was Buffett conceding that there was little that excites him. That's not what you want to hear, especially when he's got a war chest like he does.
Yeah, it's not great. And it's been kind of a similar theme for many years now, is that he's not finding publicly traded stocks he wants to buy. He's not finding great acquisitions. But I do think if you are bullish about him, you're bullish on the sense that he was willing to open up a completely different avenue that he had never pursued before, which was stock buybacks. He, opened that up more deeply in 2018. And last year, he bought back a record amount of stock, $27.1 billion. He even admitted it in the letter that it's a mildly attractive option, aka it's definitely not his favorite. I'm sure he'd love to strike a big deal. But I think it's really important to note that, he has opened it up, and he does have another way to put some of the cash to work. And to your point.
Yeah, that's what I wanted to just finish on, Kat, is he's essentially, by doing that, essentially saying, well, that's the most attractive use for our cash, right?
Yeah, it's definitely the most attractive use for his cash right now. And I think not only that, but he, made a hint at sometimes just reinvesting in their own businesses right now, their internal opportunities, be that repurchases or, deploying it back into the businesses is better than buying other businesses. And for some shareholders who really support that path, I think that's largely because they think he's being careful at a time when valuations are still relatively high, given despite the fact that recently we've had a little more market turmoil given the Russian-Ukraine conflict.
Yeah, more of a value play, a little bit more than we've seen in a while. Kat, thank you as always. Kat Chiklinski, finance reporter at Bloomberg News, our go-to on all things Warren Buffett and Berkshire. Shares of Berkshire just down a little bit in today's session. They are up about 6% so far this year.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. The fighting is now in its fifth day in the war in Ukraine. The first round of talks aimed at stopping the fighting have ended with no agreement except to keep talking. Russia has been bombarding the second largest city, Kharkiv, but Moscow's advance into the capital, Kyiv, appears to be slowing. Bloomberg's Roz Matheson has the very latest.
At least on the ground, the war very much goes on despite the penalties and sanctions that are being imposed by the European Union, by the US, the UK, by countries in Asia, aimed at really squeezing the Russian economy and certainly its elites and those in the upper echelons of power in Russia.
Bloomberg's Roz Matheson. Those sanctions now include penalties from Switzerland. The historically neutral country says it's joining with European Union sanctions. Ukrainian President Volodymyr Zelensky is calling for fast-track acceptance into the EU. Bloomberg's Maria Tadeo reports EU membership is written into the Ukrainian constitution, but it cannot happen right away.
A lot of this has to do with giving hope to the people of Ukraine, to giving them a perspective for the future, but do not expect that this membership is going to happen overnight. That's not how the European Union works.
Bloomberg's Maria Tadeo in Geneva. The Miami Marlins are ending their relationship with Derek Jeter, the Hall of Fame shortstop who's been serving as the team CEO. In a separate statement, Jeter said the team's vision for the future of the franchise is different than the one he signed up to lead. He says, "Now is the right time for me to step aside as a new season begins." Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week on Bloomberg Radio. Carol Master along with Tim Stenovic. So continuing to watch, of course, the impact of the Russian invasion into Ukraine. And of course, we're in day 5 of this, and we've certainly seen impact on markets. Meantime, a lot of financial firms stepping up front and center and taking initiatives.
Yeah, Citi, for example, disclosing a $9.8 billion Russia exposure amid sanctions. Citi said it had $9.8 billion in domestic and cross-border exposure to Russia as Western nations level sanctions against the country for its invasion of Ukraine.
It's interesting because I was hearing, was it coverage earlier this morning and saying that someone, maybe it was on Bloomberg surveillance, but just saying that a lot of the big banks in Europe and maybe the U.S. don't necessarily have direct, exposure, but they might have counterparty exposure. But this is the Citi coming out and saying, here it is, right?
It's not just banks, though, Carol. I mean, this is a market. We were talking earlier about Netflix customers in Russia, for example. Among many of the companies that operate there, Coca-Cola has exposure. Kimberly-Clark has exposure to Russia. Their worst performer in the S&P 500 today is a company with exposure to that area of the world, and it had to pull its guidance as a result.
Because these companies are global companies and they sell into different markets. Different markets have different sizes, but even a market that is a few percentage points of your overall top and bottom lines, it could potentially have an impact. Dow Jones had said that Netflix says it will not add Russian channels to its service, but still serving customers in Russia. So I think companies are trying to figure out, with sanctions and an increasing array of sanctions, what does it mean? What can I do still in terms of business operations with Russia?
Yeah, and it's also a question of, what does the world outside of Russia want to do in order to put pressure on Russia? And to what extent do they want to affect the Russian population in order to actually get them to turn against Putin and demand the withdrawal of troops, for example?
Right, and with that in mind, the prime ministers of Poland and the Baltics have demanded executives in charge of Facebook, Google, YouTube, and Twitter, quote, take a stand against Russian disinformation. This is a theme that we've seen when it comes to those social media giants. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market is trading very near session lows at this hour, and this aversion toward risk was triggered by a new series of sanctions against Russia. In the latest round, the Biden administration is banning American people and companies from doing business with the Bank of Russia, as well as the Russian National Wealth Fund and the Ministry of Finance. Now, in China, state media is reporting a Chinese envoy calling for efforts to create an enabling atmosphere and conditions for direct negotiations over the Ukraine conflict. For the moment, though, we're seeing weaker equities, with the Dow down 1.4% right now. The S&P 500 being led lower by real estate and consumer staple stocks. The index is down nearly 1.3%. NASDAQ Composite is off about 0.7%. Certainly has been an extremely volatile session in the oil patch. One chief concern is the possibility of Russian flows being disrupted. Now, the countervailing force is the possibility that we'll see a release from strategic reserves. There are reports indicating the U.S. and its allies are considering the release of about 60 million barrels of crude from emergency stockpiles. For the moment, however, WTI higher by more than 4%. We're trading 95.35 in the late U.S. session. Stronger dollar with the Bloomberg Dollar Spot Index rising 0.1%, and a move into havens, including U.S. sovereign debt that has yields much lower across the curve. A 10-year Treasury now at 1.84%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug Krisner, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. And we want to get to a story that's going to be in the upcoming issue of Bloomberg Business Week magazine. In fact, it's among the most read. It's also the Bloomberg Big Take today. And it's about Wall Street's risky razor blade trade making a comeback.
We're talking leveraged ETFs. The story is by Denitsa Tsekova. Also joining us is Joel Weber, editor at Bloomberg Business Week. Denitsa is cross-asset reporter for Bloomberg News. She joins us on the phone from our London bureau. Joel is here with us in the flesh in our Bloomberg Interactive Broker Studio. Leveraged ETFs, Joel, maybe allow somebody to get 2-3x the gains or losses in a single day of one of these indices.
More fun when it's the gains, but the other side can also happen.
Well, what could go wrong?
Well, that's the problem, is that a lot can go wrong, and many retail investors don't really know what they're getting. It just sounds like something that maybe they want some exposure to. Maybe it promises a quick buck, and oftentimes that can happen and successfully, but the downside is also always at a risk too. So, Denitsa, walk us through why we should be caring about this and razor blade trade right now.
Yeah, of course. So first, we've seen a really historic boom in those products. We're talking in terms of total assets, in terms of volumes. Just as an example, for total assets, we've seen a 55% growth just over a year in the U.S. This, of course, comes as retail traders have been entering market more and more as volatility has been rising. And some people actually say that Volmageddon, which happened in 2018 with one volatility product, was kind of an inflection point, and a lot of people heard about those products, and instead of being cautious about it, they were like, maybe we should give it a try. So definitely retail traders love them. They offer big returns quickly, but as we talk in the article, they may be offering big losses as well if you don't use them carefully. But in terms of regulation and experts, a lot of people warn about the risk of those products. First, because they're very complex, and second, they're like very sophisticated vehicles that rely on day trading and timing the market, which is such a difficult thing. So obviously, a lot of people are failing at that.
And the carry costs, which can obviously just eat away at everything. So there's some interesting tickers and ETFs in this space. What are some of the biggest, and especially in the era of the meme trader, which ones kind of grew in popularity the most?
Yeah, the biggest one for sure are those who bet against the NASDAQ or the performance of the NASDAQ, so SQQ and TQQ. These are for sure the biggest one in terms of trade volume and assets. But for example, interesting one is UVXY. That's a very popular one. That's also a volatility product. So these are kind of the most popular one. For example, our interviewee, she bets on small caps.
She uses the TZA, which is, again, 3 times the inverse performance of the Russell 2000. So pretty much you can bet against any index, and you can have a lot of leverage. In the U.S., it's only 2 or 3 times, but in other places of the world, you can get up to 5 and even 20 in some cases.
That's leverage.
Yeah.
Whoa.
Look good when it goes up, or you know, your way.
On the right side of the bet, right?
Exactly. Denitsa, who are using these products, and who should be using these products? What do experts say?
Yeah, well, retail traders are definitely using them a lot. Like, we have JP Morgan data showing that among ETFs, this is their most popular choice. As I said, big returns really fast, so that's kind of very tempting. But in terms of who should be using them, when we go to those big providers, whether ProShares or others, they all say they're for very sophisticated investors. They've been on the market for a very long time, and they should know how to use them, et cetera, et cetera. But even the SEC, when they look at their products, they say they pose risk even for those investors, because it's just such a big bet on the market that even if you're a sophisticated investor, you can get it wrong.
All right, so how likely is it that we get it wrong and this could lead to some kind of financial crisis?
Well,
what do people think?
It really depends on the product. Like with volatility, obviously this has caused system-wide risk. With betting on an index, I guess the chances of kind of causing a system-wide risk is very small. But you can imagine just the basic number of how many active managers do better than passive index, and I don't know what's the number, maybe 50%. Just imagine that type of leverage 3 times and getting it right. So the chances of being wrong, at least from my reporting, seems to be maybe higher than the chances of getting it right.
Well, the other thing to keep in mind here is, like, there are ETFs, and then there are, you know, non-ETFs. There's the ETNs and the ETPs, which can often be where the more of the dangerous stuff lies.
Do you
right?
do the ETF podcast? Because you sound rather
do you know?
informed there.
It's called Trillions, and maybe you've heard about it, and maybe I can talk about it some more sometime. But when investors, you know, forever the distinction between the two has been sort of a concern, and how risky of that from a regulatory standpoint is the industry?
Yes, for sure. So most of the meltdowns have actually been happening, not necessarily in ETFs, but other products. In terms of regulation, we haven't seen too many changes. In 2018, there was a derivative rules that capped that leverage at 2 times for ETFs, but they're often addressed. They say they will enhance protection, but currently anyone can access those. For example, Gensler says that they pose risk to sophisticated investors, to the system, but still there aren't too many restrictions for them.
All right, we got to run. Hey, listen, great story, and it's going to be in the upcoming issue of Bloomberg Business Week magazine.
A big thank you to Denitsa Seikova and Joel Weber of Bloomberg Business Week. Well, February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for Monday, February 28th, here's Bloomberg's Renita Young.
On this day in Black history in 1984, Michael Jackson wins an unprecedented 8 Grammy Awards, including Album of the Year for Thriller and Record of the Year for Beat It. To date, that's the most number of Grammys won in a single night. Several other hits and awards later in 1997, Jackson was included in the Rock and Roll Hall of Fame for the first time as part of the Jackson 5 with his brothers, and later inducted as a solo artist in 2001. In 2006, the King of Pop was named by Guinness World Records as the most successful entertainer of all time. 3 years later, in the week following his death, Jackson became the first artist to sell more than 1 million digital tracks in 1 week, 2.6 million tracks to be exact. And in 2014, yet another posthumous record. Jackson became the first artist in history to score a top 10 hit on the Billboard Hot 100 in 5 different decades. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, but 60 minutes left in the trading session. Caroline Hyde, Romaine Bostick, Taylor Riggs, joined now by our colleagues Carol Masser and Tim Stenovic as we go once again to our audiences across TV, radio and YouTube to dissect what is a risk-off mode and, of course, a concern about the global repercussions of conflict in Russia and Ukraine, Carol.
Yeah, certainly the underlying theme to everything that's going on today. What's interesting is risk-off for many sectors, but also risk-on when it comes to certain sectors of the market. And we're seeing that in the alternative energy space. If you look at the iShares Global Clean Energy ETF, and I'm not sure if we have it for our TV team, but it's up about 6.2% in today's session as we see nations and possibly areas of the world looking at moving much more quickly into renewable energy. So that's a play today, Tim.
Yeah. And
we should point out, we've already gotten one of those announcements out of Germany. I mean, the idea that these countries are going to try to accelerate, obviously there's going to be a long road, but the idea that they're even saying this out loud, that's momentous.
Well, and then you have energy companies, right, buying up renewable energy companies, and you're seeing that bigger and bigger step into it. So, Tim, you've got another sector.
Yeah, and look, you got to wonder if there's going to be a political shift, too, globally for renewables. I'm watching cybersecurity stocks because, look, there's a bid for them today on concerns that analysts are saying, hey, we could see an uptick in Russia and targeting U.S. and European companies as a result. Check out the Global X Cybersecurity ETF up by more than 3.3%.
I had my money on, Tim, you looking at Bitcoin.
I know, well, I thought you were going to go there, too.
More than 10%. But let's go to the general markets right now because we are in the red. We're off by we're currently off on the S&P 500 by 1.1%. Now, we're off of our lows, bouncing off them, but still off by 50 points currently as we trade. We're off by 450 points thereabouts on the Dow Jones Industrial Average, 1.3% lower. The NASDAQ, actually, for once, the big tech trade, not faring so poorly. They've been actually a part of the market trying to drag us higher. We're off by 0.5%, 72 points to the downside on the NASDAQ. Russell 2000, small caps, almost flat, down by just 1 point.
S&P, Dow, NASDAQ, Russell, which one of those is higher on the month?
Ooh.
NASDAQ.
NASDAQ? Yeah.
Russell.
Is it
well, you talk about the Russell because this is a inflationary, reflationary story that is underway. It is an energy sector, you guys. It is up 25% for the year. As Romaine mentioned, we're only 2 months into the year. And that story continues on the day. The energy sector, again, continues to advance 1.7%. Everything else at the bottom, though, it is red on the screen. Nowhere else to hide out. Staples, financials, real estate, those are the bond proxies as well, as you're really seeing bonds catch a bid here.
Yeah, I mean, you know, you're seeing a couple other bright spots. I mean, Carol was just talking about, of course, with some of the renewable energy stocks. Solar Edge Technology is one of the biggest movers right now to the upside in the S&P 500, up 13%. Most of the solar companies here in the U.S. and even more so over in Europe, they're all up 10, 15, 20% on speculation about maybe an accelerated shift to renewables. We continue to see a lot of the defense contractors, including L3 Harris, up about 7%, big maker of radio and a lot of communications used on the battlefield. Banks stocks down once again. Citigroup down 5%. All the big banks are lower once again. A lot of people really trying to sort out the ramifications of these sanctions, not only just the direct exposure, and Citibank did come out and disclose that it had about $9.8 billion in domestic and cross-border exposure to Russia, but it's also about the ripple effects into the investment banking businesses and some of the other ancillary businesses they have that could sort of touch maybe on the periphery of Russia that they've got to be mindful of here. And I just want to point out at the bottom of your screen, not a stock we talk about a lot, but EPAM Systems. This is a big software developer. Yeah. They were, I believe, based in Belarus. They started in Belarus. They came to market in 2012. This was a huge deal. These are basically a company that was sort of born out of all these independent Commonwealth nations over there. So think, you know, Russia, Belarus, Ukraine. This was kind of their shining star here in the U.S. market. Big software company. It really sort of illustrated the brain power that existed out in these Eastern European nations. This was a huge deal when it came to market. It's down 44% today. Wow. The company has already come out and basically said that it's already had to shift employees out of Ukraine, out of Russia. It's had to suspend certain operations. And just one real quickly, Tim, we should point out that a big chunk of their business, I believe it's the majority, comes from, unfortunately, European financial firms. That's where they do a lot of their work, and they're also concerned about how the sanctions could impact that business.
Yeah, this is a member of the S&P 500. It's the worst performer.
It just entered the S&P in December.
Yeah.
Yeah, almost $1 billion coming from Europe, and it looks about $110 million from Russia based on some Bloomberg geographical breakdown in terms of its exposure. So, yeah, that's going to hurt.
And I think we've got to recognize the sheer engineering talent, the development talent that there is over there in Ukraine. That's a particular area of expertise that's being hurt, and you're feeling the ripple effects of that worldwide. Now, what's so interesting, I bring a chart to our TV audience, for our radio audience. I'm showing how, amid all of this concern, the spillover effects, the inflationary pressures that we continue to see with oil prices, commodity prices, food prices, we're actually pulling back on our views that the central banks will hike anytime soon. We're pulling back on the Bank of England. We're pulling back on the United States, pulling back our expectations for rate hikes over in Europe as well. Remember, we'd had, what, 6 or 7 expected by the market, and they are continuing to draw down as we perhaps worry more about stagflation. From a growth perspective, but what about the inflationary pressure right here, right now?
Which might put us in a really difficult position, right, where growth is slowing and yet rates are higher. I thought about the Bloomberg quiz already. Do you know that there's going to be a question, what central bank raised rates 20% this week?
Russia.
220%.
Well, 220.
220%, Carol.
By 10.5%.
220%. By 10.5%.
I hope Carol's not writing these quizzes.
I only do them. All right. You're talking about, though, the Fed. And what's interesting is we are watching global companies make moves when it comes to Russia specifically and their exposure. What's interesting is Jamie Dimon caught up with our Ed Hammond today at a conference, a JP Morgan event down in Florida, and they talked about specifically the U.S. economy. Jamie Dimon's still pretty optimistic.
I really applaud what the government did to get things back. And it's very easy to second guess and do all that. I hate doing it. I'm about to do it. They probably too much fiscal stimulus and quantitative easing, but you still have a very strong economy. And, I think the Fed's going to try to meet that strong economy with strength by raising rates and, reversing QE, not to eliminate, to slow it down, so you reduce inflation and all of that. And I wish them the best.
All right, so certainly important to watch what's going on geopolitically, but we can't forget that this is going to be a big week for the U.S., right, when it comes to a lot of economic data points. We're also going to hear from Jay Powell, Tim.
We're not just going to hear from Jay Powell. We're going to hear from President Biden with his State of the Union address. We're just learning that the president is set to lay out a plan to lower costs, healthcare costs, childcare costs, a plan for energy as well. So I bet inflation will be a big topic of that speech.
I mean, indeed, we're getting breaking news that we understand Biden will comment on the cost of ocean shipping in the State of the Union address. Romain, you've been talking about the Baltic Dry Index, the inflationary pressures we're seeing at the moment.
Yeah, I mean, it jumps up, 26, 27% on Friday. That was after a 25% jump the day before here. And I mean, look, it's going to be a big challenge here for any president to sort of make unilateral changes that can actually tamp down some of these inflationary pressures. I think the Biden administration knows that, but it's a matter of how you sell this to the American people, and I think it's going to be a hard sell.
It was interesting, though. We heard from the Devon Energy CEO, and he said that he was pretty mystified that the administration hasn't reached out to him to increase production. They want OPEC to increase production, but they certainly don't want U.S. and American companies to do so. And he said that it'd be easier sell to some of the shareholders that they could get behind it because they've been so focused on that cash flow and the return of money. But he was surprised that he hadn't heard from the administration.
I think it's interesting. We've heard from other CEOs saying that maybe it's time to kind of put some of those climate goals, at least just to the side for a little bit, while we address some of the issues with Russia and Ukraine. But I do wonder what, at least domestically, what impact that would really have. Because even if you increase the pumping, you still got to refine it. We already know that we're at capacity at a lot of these refineries. So I don't know how much of an effect that would have immediately.
Can we afford to delay stuff when it comes to the climate? Time will certainly tell, but the reports say differently. All right, we're going to continue this conversation. Lots going on this Monday. Join us when we continue our cross-platform coverage. We call it Beyond the Bell, on radio, on TV, on YouTube. We're going to be counting you down to the close on this Monday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so there is a lot going on this week. As you said, we've got, I talked about Jay Powell, we've got the president, the State of the Union, which certainly matters most to the American public ahead of those midterm elections. And we've got some earnings, some big earnings still to come.
Yeah, we do. We're certainly busy here. I want to go back to State of the Union, though, because this just crossing the Bloomberg, as we were on Bloomberg television, the president is going to comment on the cost of ocean shipping in the State of the Union. Who would have thought, Carol, that this is something that would be talked about in the State of the Union, right? Ocean shipping. If you would have told me 2 years ago that they'd be talking about that in the State of the Union. A plan for energy, childcare, and healthcare costs to lay out a plan to lower costs. How is he going to do it?
Yeah, I mean, what most Americans usually vote with their pocketbook, and whether they're feeling like they're doing better than they were under this administration, I feel like it's complicated because we're still dealing with a pandemic. We have these, unusual inflationary pressures that are out there, and you talk to CEOs and leaders, and they do expect some of it to continue to persist for a little bit longer. All right, let's get back to world and national news. Off to Nancy Lyons. She's in D.C. Hey, Nancy.
United Nations Secretary General Antonio Guterres is calling on Russia and Ukraine to reach deep to find a solution to end the fighting. The remarks came during a rare emergency session underway at the UN. Guterres says a diplomatic solution is still within reach.
The guns are talking now, but the passive dialogue must always remain open. It's never too late to engage in good faith negotiations and to address all issues peacefully.
UN Secretary General Guterres, today's talks between Russia and Ukrainian negotiators did not bring any breakthroughs, but more talks are possible. Well, the sanctions keep piling up against Russia for its invasion. Ned Price is with the State Department.
We have sanctioned Putin himself. We are disconnecting key Russian banks from SWIFT. We have imposed restrictive measures against Russia's central bank. And we are standing up a joint task force to find and freeze assets of sanctioned Russian companies, oligarchs, and other government officials.
That spokesman Ned Price, he says the U.S. will continue to provide monetary support to the Ukrainian government. Russia has hit back with counter-sanctions and is banning aircraft from 36 countries from its airspace, including all 27 members of the EU. Omicron is fading away, and so are America's worries about COVID-19. Fewer Americans now say they're concerned they'll be infected. A new AP NORC poll found just 24% report being extremely or very worried about themselves or a family member contracting the virus. That's down from 36% in January. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. studio. Carol Massar, Tim Stanovic. We are live at Bloomberg headquarters in New York City in our Interactive Brokers studio. This story certainly came to our attention. It crossed overnight. China is accelerating its ambitious program that supports startups in industries such as chip making and biotech, part of its effort to challenge the U.S. in crucial technologies. We're going to talk to Andy Brown in a moment of Bloomberg New Economy. I'm curious to hear what he has to say, because with everything going on, China's got its long-term planning, and it's moving ahead.
Yeah, the industry watchdog is ready to name about 3,000 state-level, quote, little giant startups this year to spur local innovation. That's according to the Minister of Industry and Information Technology, who said in a media briefing in Beijing on Monday. So that would bring the total number, Carol, to almost 8,000. That marks the most aggressive expansion yet for what President Xi Jinping's latest attempt to add China's tech capabilities amid a fierce competition with the U.S.
So what this designation means is it allows startups to basically enjoy incentives while signaling to investors and employees that the companies enjoy Beijing's special endorsement. The innovation capabilities as well as sales and profitability of Little Giants has, quote, clearly improved compared with other companies. And again, this is coming from the Minister of Industry and Information Technology. Okay.
Talk to me.
I'm writing a book. It's going to be called Recalibration.
Okay.
Because we are sitting at interesting times where geopolitically we are redrawing lines when it comes, I think, to alliances. I am curious to see where China ultimately lands because of its friendship or seemingly friendship. We're going to talk about this with Andy Brown in terms of Russia. But even the energy shift, right? It's uncomfortable, but it's happening. We talk about technology is being disrupted. There's just a lot of things that are changing right now.
Has the ship sailed? Is the horse out of the barn? Can the United States develop industries that it relies on China for to have products and have products made?
Many would argue that we're so innovative, right? But you should also then continue to allow immigration policies to allow people to come in and start up companies.
But what about things that aren't necessarily high tech that we rely on China for?
Well, that's low cost producer, but they're increasingly shifting or shifting out of China. Lots to talk about.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Less than 43 minutes until the closing bell on this Monday. We're looking at lower equities, lower U.S. interest rates, and a rally in crude oil. Want to get you the very latest now as we cross to the Bloomberg Macro Squawk Desk. Bill Maloney is here. Hi, Bill.
And good afternoon, Doug. U.S. stocks are back under pressure, even though the S&P and NASDAQ were green at one point. Dow's currently down 445 points. S&P's dropped 51. NASDAQ is lower by 92. The U.S. 10-year yield falls to 1.83%. Gold is up 16. Oil is climbing. And Bitcoin soared as much as 11%. Among the main 11 S&P sectors, only energy was in the green. And leaders to the upside in the Dow, Chevron and Boeing, while J.P. Morgan, Goldman Sachs, and Visa led to the downside. In deal news, Chevron is buying Renewable Energy Group for $61.50 a share in cash. And in other news, EPAM Systems plunged as much as 48%. After pulling guidance, and the Russian ETF is down as much as 30%. Wrapping things up, HP Inc. and Zoom Video report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, Bill, thanks. And to get live breaking news right on the Bloomberg Terminal, if you are a Bloomberg Terminal customer, the function is SQUA, then the green Go key. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, we're getting a little lost with our next guest, Andy Brown.
Rightfully so.
Yeah, because we just have so much. He's fresh back from the Olympics.
Yeah, we want to talk to him about that. We also want to talk to him about China and Russia and that relationship, because Andy wrote about it in his Saturday column. China has a big Ukraine problem. Bloomberg New Economy editorial director Andy Brown, he is here in our Interactive Brokers studio. Good to have you here. Let's start with Ukraine and Russia, first of all, because I feel like every discussion we have, Andy, about the Russian invasion into Ukraine, we bring up China and what the relationship is. How do you see it?
So the way I see it from China's perspective is that right from the start, China has miscalculated and blundered. And it begins with this extraordinary meeting between Xi Jinping and Vladimir Putin, literally hours ahead of the Olympic opening ceremony. And Putin gets Xi to sign up to this radical, world-changing agenda, which essentially declares that China and Russia have no limits to their relationship. We've gone back to the sort of Sino-Soviet pact of the early 50s. And Putin hasn't mentioned, apparently, to Xi that he's about to invade Ukraine. And so, of course, when he does, it looks for all the world as though China is complicit, or at the very least, China has given Russia cover for this. And in the interim, China is arguing to the world and convincing itself, apparently, that there's no way that Russia could possibly invade Ukraine, even though the U.S. is feeding China all kinds of high-level intelligence, which suggests that that is precisely what was about to happen.
So either way, if they knew, shame on China. If they didn't know, like, don't you understand the relationship with Russia, right? They kind of couldn't win.
They've been gamed. They have been gamed. China has been gamed. And then they got everything else wrong. The embassy, the Chinese embassy in Kiev, told Chinese citizens in the country to wave the Chinese flag out the window, which would keep them safe, not understanding, of course, that the Ukrainians took a pretty dim view of the fact that China wasn't prepared to condemn the invasion, and in fact wasn't even prepared to call it an invasion.
So where does this leave China and Russia in relation to the war in Ukraine and the support that China has for Russia as, well, an ally?
Well, for a start, it blows apart all of China's most cherished foreign policy principles, starting with the idea that state sovereignty is sacrosanct. And it may actually be that the only way that China can extricate itself from this predicament that it's got itself into is to try to act now as some kind of a peacemaker. And indeed, we're starting to see China making more constructive statements.
How much does China need Russian oil and Russian energy access?
Well, it certainly needs Russian oil, and it needs it even more on these terms because, we just saw today that Russia and China signed a big gas deal, which will involve the construction of a gas pipeline through Mongolia. And of course, Russia is now so needy that any energy deal that the two sign are going to be very much on China's terms. China may also get some good military technology out of this as well. But at what cost? At the cost potentially of blowing up relations with the United States and Europe.
Where does this leave Russia as a country that was looking to have an ally in this?
Well, very dependent, far more dependent than ever on China. China comes out of this looking very much like the senior partner, and Russia is the junior associate, even though it has to be said that Chinese influence on Russia when it comes to Ukraine is pretty limited.
Andy, it's so tricky. So I do wonder if Russia continues to, we don't know how this is going to play out, but let's say it goes on a little bit longer or it's just odd. Does China, though, risk cutting itself off from the rest of the world, or is the rest of the world man enough to cut itself off from China if China continues to have some kind of relationship with a very, very tricky Russia and Vladimir Putin?
This goes back to the miscalculation and the blundering. I think China was very surprised at the solidarity that the West showed in the face of naked Russian aggression. I think it was shocked by the scope of the sanctions, and now it's very worried that it's going to get caught up in secondary sanctions if it tries to throw Russia a lifeline.
Part of the discussion last week included the status of Taiwan and what happens in the wake of Russia's invasion in Ukraine. Bring us up to, what's your read on that?
People will say, you hear people say things like that the Russian invasion of Ukraine is a warm-up for China's invasion of Taiwan. The situation is very, very different. China is not going to be pursuing a Taiwan strategy based on a Russian timeline. Militarily, the situation is quite different. Putin can roll his tanks across a land border. Xi Jinping, if he wants Taiwan, has got to move armies across 90 miles of ocean, and it's got to take over an island the size of the Netherlands that's been digging in for the last 70 years. It's economic suicide as well.
All right, we'd be remiss. 25 seconds, sorry. Olympics, your takeaway. You were over there reporting with NBC coverage, just quickly.
Technically, China pulled off a great games. It was a very, very weird atmosphere, particularly, including for me. I lived in China for 20 years, and I went to China, but I didn't really go to China. I went from cage to cage, looked at the country through wire mesh fences.
You talk about landing in the Chinese airport, nobody was there.
Leaving the Chinese airport, we were the only 6 people in the airport. It had a 100 million passenger throughput in 2019.
It's hard to get your head around it. Andy Brown, thank you so much. Editorial Director of Bloomberg New Economy. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, it is Bloomberg Business Week. It's 3:31 on this Monday, Wall Street time, 3:31 p.m., and I'm already tired because it's been a full day.
This Monday, Carol. I'm sorry.
I know.
We got a long week.
We got 4 days to go. A lot going to go on. Coming up, we're going to dig a little bit deeper into the energy markets. There is a lot going on. We're hearing from the equity side, we're watching the commodity side, and of course the geopolitical side.
Well, speaking of the equity side of things, we're under a half hour away from the close of trading on this Monday afternoon. Let's get an update from Doug Krisner, who's standing by. Hey, Doug.
Hey, Tim. The equity market is very near session lows right now. We've got, 29 minutes until the closing bell. The Dow on the back foot here. We're down about 1.2%. In the broader market, we have the S&P 500 weaker by more than 1%. It's real estate and financial shares leading this decline. Today's risk-off mood obviously triggered by that series of new sanctions against Russia. These measures have triggered a financial crisis in Russia and volatility in global markets. We spoke earlier in the day with Jamie Dimon, the CEO of JP Morgan Chase.
Market volatility is not the same thing as the economy. And, the economy looks like it could be pretty strong for a while. Obviously, there are things that are going to upset that apple cart. Market volatility, unless it affects the economy, most of people don't care. They don't pay that much attention to it. So I think you will inevitably have a lot of market volatility.
That is JP Morgan Chase CEO Jamie Dimon. Earlier in the day, markets were really struggling to price the ruble. The currency now down 30% against the dollar. And that weakness prompted the Bank of Russia to more than double its key interest rate, all the way to 20%. Look at the price action in some of the ETFs that trade kind of Russia-related. This is the Van Eck Russia ETF, which is down right now by roughly 30%. And the iShares MSCI Russia Capped ETF is down quite a bit as well. A move into havens, not surprisingly, U.S. Treasuries among them, and we have a drop in yield. A 10-year Treasury now at 1.82%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, as we do each and every day at this time, we check in with Kriti Gupta, markets correspondent at Bloomberg. She's with us in the Bloomberg Interactive Broker Studio. Also with us is Julia Fenzares, oil markets reporter for Bloomberg News. She's with us as well. We got a little oil party going on here in the Bloomberg Interactive Broker Studio. Kriti, I want to start with you because we obviously energy a focus right now because of everything happening around the world, particularly though when it comes to the Russian invasion of Ukraine. Oil prices spiking today, once again.
Oil prices spiking, and I think it was kind of better to have this roundtable instead of the regular chart of the day so we could include Julia and use her brain a little bit. What's important to keep in mind is that there's only a handful of sectors that have been doing well as the broader market has actually kind of tanked. And one of the is going to be defense, and the other one's going to be oil. And that kind of makes sense, right? Because in a war, what are the two things you need? You need supplies, you need fuel, but you also need equipment, things like artillery, arms, etc.
Alternative energy also doing well today.
It is, and that's
kind of fits into this.
We're gonna have to bring Julia into that conversation. But from a sector point of view, those have been kind of essentially your hedges, which to me was really interesting, especially at a time when commodities broadly were already kind of hedges thanks to the inflation conversation, right? Before even geopolitical risk was really in the picture. And I think that's the story of these next couple of days. The fact that when the market was tanking in these last 6 weeks, you saw defense skyrocket, you saw energy stocks skyrocket.
All right, so let's bring in Julia. So you're looking at the energy markets. What is jumping out for you, and what do we need to know about?
Yeah, I think what everyone is looking at is first the sanctions that came over the weekend, the extra sanctions on Russia. And even though those sanctions did not touch energy supplies, they're still going to be hit because traders don't really want to touch any Russian oil. They don't really, right now, Russian grade oil, which is Urals, they're at a steep discount. They're much cheaper than Brent crude oil. So that already is showing up. So even though they're not any official sanctions, Russian oil, people don't want to touch it. So that's what I've been looking at. And also the fact that prices opened really high because of these escalated tensions, and sanctions, but then it cooled down a little bit today. I want to say just $5 up, even though that's a crazy thing to say, but that's because of the SPR release that the U.S. and other nations are thinking of doing. They're thinking of tapping into their strategic reserves to get more supply out into the market.
Does that even make a dent in the United States?
So what a lot of people are now on board for this round of SPR releases, because this is what the SPR was made for. It was actually made to in these geopolitical times. So it will make a difference, especially in coordination with other countries, because they're thinking 60 million barrels, and that's a lot more than in November. They were talking 27 million, 30 million. So it is going to be a lot more.
Are we increasingly, the macro fundamental longer term story is, and I think about Chevron buying renewable energy, BP pulling out of Russia and their deal. You saw Shell also backing out of a deal that it had in terms of Russia in energy. Is there finally kind of a dramatic shift and acceleration to move away from, our traditional ways of providing fuel and energy to the global economy, to really looking increasingly at alternative energy?
Absolutely.
You're certainly seeing it play out on the equity side of things today.
No, absolutely. And when I was at an energy conference in Houston less than a month ago, I was hearing from CEO of Occidental, Vicky Hollop, and she was saying, I don't even have the conversation anymore of climate deniers. Climate change is happening and we need to make a difference. And so all these big oil companies are now also starting to invest in renewable energy. So you do see that shift, and you see it in all of the earnings calls, and these CEOs are really emphasizing that more and more.
Okay, but what does that transition look like? Because
how long, right?
And how long is that transition? I mean, think about it not just from power generation perspective, right? As the United States pushes to close nuclear power plants and doesn't actually have enough solar and wind and hydro to actually power the U.S. We are reliant on oil. We are reliant on fossil fuels.
And that's exactly what we're seeing here. And when we are reliant on fossil fuels, and when we don't have access to it and it's a tight market, then these prices are going up because we still need it. So that's a great question.
But what's interesting too is when companies back away, and let's bring you back into this. If BP says we're pulling out of Russia, if Shell does, this is just not a knee jerk. They thought this through, because once they probably pull back, it's unlikely perhaps that they go back in.
Yeah, and historically, they have faced this before, right? And one of the big kind of historical narratives of BP, Anne-Marie Hordern did a great job of reporting this, was when the Soviet Union first fell, BP was the first company to go in and kind of create that relationship with the Soviet Union. So there have been this very long historical norm, but they do have to start from scratch, essentially, to your point. And also to your point, Shell, Total, they're not just investing in Russian state giants, they've invested in physical infrastructure, pipelines, LNG pipelines that go all throughout Europe.
I'm just going to put out there, Mike McGlone sitting down with us, was it last week, and talking about $30 crude oil and saying that might be the result of what's going on here. And I think, how people start to look more domestically, like what do we need to produce in our own backyards?
Yeah, and we actually had the Devon Energy CEO on Bloomberg TV earlier, and he was so smart. I was listening to him really talk about the idea that demand destruction is such a real possibility, and this is even when shale producers like him that were so responsible for that shale boom just a couple years ago, 5-6 years ago, they're saying, well, we don't even really need to do that anymore because we have enough supply in the market, we have that capital discipline, and there's just no need.
Well, we shall see, but it's certainly feeling like something major is happening. Kriti Gupta, thank you so much. Markets correspondent at Bloomberg, and Julia Panzera, she is oil markets reporter here at Bloomberg News. Thanks, guys.
Let's head to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. No breakthroughs to report from today's meeting between Russian and Ukrainian negotiators, but more talks could happen. Interfax is reporting Russian President Vladimir Putin will only agree to a settlement if Russian security interests are addressed. AGF Investments' Greg Valliere tells Bloomberg Putin is not negotiating from a position of strength following military missteps.
They ran out of food. They ran out of fuel. Morale is terrible. They're not taking over these cities. And then you look back home in Moscow, and I think he has to know Russia faces not a recession. Russia is facing a depression.
Greg Valliere says Putin appears cornered right now. Well, President Biden has a busy week with the war in Ukraine to deal with and a State of the Union address set for tomorrow. Bloomberg's Amy Mars reports Biden's speech comes with his poll numbers slumping.
The Washington Post ABC News poll this weekend showed only 37% of respondents approved of President Biden's handling of the economy. White House Chief of Staff Ron Klain assured Democratic senators that the address will include the the administration's efforts to bring down prices, and they're worried inflation is drowning out the broader picture of an economy returning to health. You can hear our coverage starting at 8:30 Wall Street time tomorrow night right here on Bloomberg Radio and Bloomberg Television. In Washington, I'm Amy Morris, Bloomberg Radio.
It's deadline day in the baseball lockout. The league had set today as the last chance for a labor deal in order to avoid delaying opening day. Players and owners are meeting again today. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Ann, thank you so much. Carol Masser, Tim Stanovic, live in our Interactive Brokers studio. So let's talk about a couple stories that are certainly, can we just go right to the world's biggest plane?
Yeah, let's do it. This is one that caught my attention over the weekend because
Yeah.
I follow a lot of aviation people on Twitter, and people love when this plane used to land at U.S. airports, which it would do. People would go and they would just take video of it and they would post it because this thing was so cool.
And hopefully we have pictures on YouTube, maybe for our team. There it is. For those of you watching on
Look
YouTube,
at
just
that
search
thing.
on Bloomberg Global News.
We're talking about
massive.
Yeah, the world's biggest aircraft, the Antonov 225 cargo plane. It has been destroyed by Russian forces while it was under repair at an airfield near Kiev, according to Ukraine state-run.
It's a six-engine aircraft, 84 meters long, has a wingspan of about 88 meters. It first flew in December of 1988, holds records for transporting the biggest commercial cargo. And now it's going to take, more than 5 years and a cost of over $3 billion to restore it back to what it was.
I wonder, it's interesting that they're going to actually restore it. This is a plane that was used all over the world to transport cargo, and it was, for years, it was developed under the former Soviet Union, and it lived in Ukraine for years, and they actually brought it back to life after years of it sitting dormant, and we're using it to ferry cargo for countries around the world.
Yeah, it's pretty...
This 6 engines,
Yep.
it's got so many wheels that come down because it's such a heavy plane that the weight needs to be distributed evenly on a runway in order to not damage the runway.
I mean, it's massive. And if you
Massive.
just look at the pictures just to get an idea of the scope of it. And it's just, and I think for the Ukrainian people, just about bringing back something that was an important part of who they are in terms of being part of the commercial world, right, in the business world.
Well, speaking of aviation, I do want to hit on this last story, Carol, because Russia has barred airlines from the European Union, Canada, and a host of other countries from its airspace in retaliation to sanctions that they imposed in response to its invasion of Ukraine.
Yeah, this is the back and forth that we're seeing. And increasingly, as we heard earlier on Bloomberg Surveillance, Russia isolating itself from the world.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have under 13 minutes to go until the closing bell. It has been a day of volatile trading in equities. Right now, the S&P 500 down about 0.7%. We had been down by as much as 1.6% earlier. And if you can believe this, at one point in the day, the S&P was actually positive. The market has been struggling through the entire day thanks to a series of new sanctions against Russia. Now, the markets were earlier struggling to price the ruble, the currency right now down about 30% in its value against the dollar, and that prompted the Bank of Russia to more than double its key interest rate to 20%. The New York Times had an interesting quote earlier in the day from Michael Bernstein. He is with the Hoover Institution, and he was saying, if people trust the currency, the country exists. If they don't, then it goes up in smoke. We're seeing a lot of positivity, if I can use that term, in the crude oil market, with WTI up about 4.7%. We're trading 95.90. Obviously, the chief concern here is the possibility that we'll see a disruption of Russian crude. The countervailing force may be the possible release of strategic reserves. There had been reports earlier on the U.S. and its allies considering the release of about 60 million barrels of crude from emergency stockpiles. We're seeing havens very much in favor. That would include U.S. sovereign debt, a big drop in yield, a 10-year Treasury that has lost more than 12 basis points. We're at 1.83%, and a 2-year now at 1.44, down nearly 13%, as the market begins to shift bets on a much less aggressive Fed. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
For months, the U.S. has held on to about $7 billion belonging to the people of Afghanistan. That money must be administered wisely. Some background. After the Taliban swept into power last summer, the U.S. blocked Afghanistan's assets held at the Federal Reserve. President Joe Biden recently issued an order creating the impression that half those funds would go to the families of victims of the September 11th terrorist attacks. To be clear, Biden's intentions were good. After the U.S. froze the reserves, a victims group laid claim to all the money as part of a judgment won against the Taliban. Biden's order cuts the amount they can pursue in half, and the plaintiffs must still win their case in court. But the reserves rightfully belong to the Afghan people, and it should be reserved for its intended purpose to stabilize the Afghan economy. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
To making dinner plans in the break. Let's get to it. Let's get to the drive to the close on this Monday. It's been another volatile session. We've certainly seen that play out as we continue to watch as we are in day number 5 of the Russian invasion of Ukraine.
Well, I want to bring in Dan Pipitone, the co-founder and CEO of Trade Zero America. He joins us on the phone from Brooklyn. Dan's a favorite of Quick Take Stock. We have him come on frequently to talk about what's going on the Trade Zero platform.
He's a favorite of ours.
Oh, well, he's also a favorite.
No, he's a favorite of ours.
Likewise, guys.
Okay, well, we're fighting over Dan.
We'll share.
Dan, I want to hear your thoughts on what you're seeing on the Trade Zero platform and the activity that you're seeing, how investors are thinking about the volatility, because we got a really interesting comment from JP Morgan Chase CEO and Chair Jamie Dimon earlier in the day. Oh, well, the one about the volatility not being indicative of the economy. He said this is still a strong economy.
Well, there is, and for us, we our traders and our customers really look for that intraday volatility, and we've seen some extreme examples of that in January, sort of mid to end of January, beginning of February, cooling off, waiting for some geopolitical events to either happen, not happen, and as we've seen in day 5 of this Russian invasion, that has definitely created an impetus for for more volatility. We've seen some historic swings over the last few days. right on was it Wednesday or Thursday when they first announced the invasion or they first started. Was it 17 or 1800 point swing intraday, and so volatility is definitely back. We're seeing more of it today. Down 500 points. The mark was actually positive for a minute. This is a trader's market for sure.
Yeah, we had a couple days where the NASDAQ 100, I think, there was 2 days where we had like 1,000-point swing. I mean, it has been tremendous. All right, so investors are nervous and we're reacting, like the Fed. We're, day-to-day tracking information, right? Data-driven. And that's what it feels like this market's about. What are you seeing on your platform, Dan, about where investors specifically want to be?
Well, we're seeing them, pile in a lot more on the short side, especially these last week and a half or so. That's one of our MOs is facilitating, equal access on the long and short side. And so having that extra tool in their belt, folks have been better able to navigate sort of some of these wild swings and not just hoping that, you pick the right stock and it goes up. So for us, the names that you would expect, the names that have been in the headlines lately, we've seen a shift really in January, folks moving away from some of these, low price securities and more into some of the larger tech names. A lot of those have really come down a lot in January and February. So we're seeing a lot more opportunity on some of these higher priced tech stocks that have come down a bunch, and people are really flocking to those over the last few weeks, we're seeing.
Like who? The usual suspects? Or can you dig a little deeper for us?
Meta, Apple, to name a few. Today we're looking at this large cap stock, EPAM. This one has really been crushed over the last few
Worst
weeks.
performer in the S&P 500. Worst day ever for the company. Shed about half its value.
Yep. So, and they're tied to Russia, trying to get folks out of Russia and Ukraine as it relates to their development teams. So this has been a hot one for us today, for folks really participating on the downside.
Dan, when you say Meta, Apple, are you saying investors piling in on shorts on those names or no?
I think they've come in focus more to trade them, both long and short. The volatility on these have been sort of, small cap-esque, if you will.
Yeah.
Hey, Dan, today's big take here at Bloomberg is all about leveraged ETFs. And I'm wondering if you see you've seen an uptick on an activity on the platform of leveraged ETFs. ETFs
we have not. I mean,
you haven't.
This is something that we offer, and again, depending on the ETF, we may or may not have margin on it, depending if it's 2 or 3x. But this has not been one of the ones that with the leveraged ETF haven't been in play with us over the last week or so.
Interesting.
So, okay, I feel like the next couple of weeks are going to be interesting. We've got Jay Powell up on Capitol Hill, Humphrey Hawkins testimony. We've got some big economic reports. We're going to get, I think, another print, a CPI print coming up. And then you've got the Fed meeting. So could we see, Dan, essentially kind of a trade here and then a trade post that March meeting that maybe settles things down? And I guess all bets off in terms of it depends also what happens with Russia and Ukraine.
Yeah, it's really going to depend on what we see happen and how this really shakes out.
Okay.
I think without Russia, we're looking at potentially 7 rate hikes this year, which obviously creates some headwinds in the markets, generally speaking. But these extra geopolitical events, I think it's more of a wait and see at this point. With the inflation, that sort of historic highs in over the last month and a half, levels we haven't seen over the last 3 or 4 decades. I think that interest rates, rising interest rates is needed, but it's going to be interesting to see how inflation potentially settles off and what other actions that the Fed will take to help mitigate that.
Well, I'm wondering. I want to end, Dan, just by talking a little bit about retail investors because you have a unique window into retail investors and what they're doing on the platform. And we talked to you a lot last year about meme stocks, and I'm wondering if you're still seeing trading around those names.
Around the historical memes like the AMC and GameStops, there have been flare-ups over the last year and a half, I would say. Those stocks are still in focus. They're still in play. I think whenever there is any news that gives any one of those meme names any sort of pop, the short sellers are piling in. And likewise, when you have a big drop, folks are betting in on the long side and kind of bringing them back up. So they're still there. But in terms of the earthquake, if you will, that we saw last year, about a year ago right now, we haven't really seen that happen again. but those stocks have remained sort of in play as ideas and trading prospects.
All right, got to leave it there. Hey, Dan, thank you so much. As always, Dan Pipitone, he's co-founder and CEO at TradeZero America, on the phone from Brooklyn, and certainly a favorite of ours, and I know for you over in Quick Take.
We can share.
We can share. There's enough Dan Pipitone to go around. Just a few minutes left in the trading session, and we are definitely bouncing around. We are seeing a bunch of volatility. In fact, the VIX up about 2 points here in today's trading session, just below 30 on the VIX, but we are still down about 15 on the S&P, and the Dow off about 200. NASDAQ, though, a gain of about 41. All right, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to that closing bell, here to help take us beyond the bell. It's our global simulcast. Carol Massar, Tim Stenovic joining us right now. We welcome in our audiences across Bloomberg Television, radio, and YouTube. Carol, a lot to parse here, not only for the day, but really for the month here. We're bouncing off the lows of the day, at least for the NASDAQ and the Russell, but we're still pretty much deep in the red here for most of the major indices.
Yeah, absolutely. And I've been looking at the swings. I mean, first of all, we've got about 2% swings on both the NASDAQ 100, the S&P 500, and also the Russell. So anywhere in the market, it feels like there's volatility and uncertainty, Tim, among investors.
Well, one thing that's interesting is there's not uncertainty about Bitcoin's price today. It's up close to 12%. And this is pretty fascinating because it's been, a really risk-off day for the most part, but Bitcoin's been higher for much of it. So it's kind of going against the narrative of trading with equities.
Instead, it's looking at potentially the repercussions of sanctions. And you have to look at each and every type of asset, each particular global repercussion of what might happen from the level of sanctions, whether they'll be raised, whether the fact that Canada is now pushing back at the sort of for oil imports, a small importer as such, but whether we see any spillover effects from there. It's notable we got volumes up. Is anyone going to dare to say rebalancing on an end of the month kind of a day?
We could say that when it comes to treasuries, Romaine. I know
won't
you
say
don't want to hear
I
that.
won't say that. No. No, that's a myth. No, I'm joking. It's not a myth. Don't nobody write me, please. But seriously, when we get back kind of to the gains that we've seen here today, late in the session here, and you add to that the rally that we saw on Thursday and to a smaller extent on Friday here, it does give you a sense that at least here in the United States, and specifically within financial markets, some people think that the economic effects will be relatively contained and that at least here in the United States, we maybe won't have as much to worry about. The Dow Jones Industrial Average is going to finish the day down, though, by about 0.5%, down 179 points. For the month, it's going to be down by about 3.5%. The S&P lower by about 11 points or 0.2%. Here on the day, it's going to finish the month of February, down about 3%. The NASDAQ higher on the day by about 57 points or 0.4%, and it's down almost 5% on a monthly basis. As far as the Russell 2000, higher on the day by 0.3%, and for the month of February, it's up by 1%.
Even a little volatility when it comes to the closing bell, kind of closing and then not. What's interesting is the VIX up another 2 points. We just talked with Dan Pipitone over at TradeZero America, and he said what he's seeing on the platform is investors going long and short names like Meta, Facebook, those big technology names, Taylor.
Interesting. You're also seeing some big longs when it comes to the energy sector. And I've sort of been repeating this, Carol, but the theme for the year has been an energy sector that's up 25%. And the theme of the day is that continues. You're up 2% or more at least. Auto components come in there as well. Utilities are also gainers. Partly is because yields lower. Typically has been a boost to utilities. Otherwise, those are the only four sectors in the green. Everything else is pretty much red on the screen and much, much lower. I'll bring you down to some of the sectors at least that are a lot lower. Consumer services, real estate, food and beverage, and then of course the financials. With those yields lower, there's been a lot of talks about how they're going to be operating in this sort of environment and this new regime. The financial sector, you're off about 2.7%.
All right, so amid all of this red, we did find some gainers and some standouts. Got to talk about the Chevron deal confirmed early this morning. We talked about it late on Friday when Bloomberg reported that there could be a deal to buy renewable energy. Chevron coming out and saying, yep, we're going to do it. It's a $3.1 billion billion deal. And so we see shares of Chevron up about 1.5%. Its Target Renewable Energy up more than 40%. And it's just showing how we are increasingly seeing even those big integrated oil companies looking at a non-carbon world and increasing their steps when it comes to that. Also got to talk about clean energy stocks surging. One of the standout groups in today's session, Solar Edge, was top in the S&P 500, up about 15% here. And again, this is expectations because of the Russian invasion of Ukraine. We're seeing increasingly the U.S., Europe expectations that they're going to move even more quickly into renewables.
I'm glad your board has all three energy companies, because when you look at what we saw in the S&P 500 and the sort of the bounce that we got into the close here, 5 of the top 10 stocks to close out the day here on a percentage basis, the gainers are energy stocks, and the others are like Tesla, which I guess can sort of fall into that energy category, and the rest are basically defense contractors. So that's what basically got bid up into the close.
Absolutely.
Hey, well, let's look at some of the decliners today. Romaine, you talked a little bit earlier about EPAM services, EPAM Systems. This is an IT services company having its worst day ever. The company finished the day down by more than 45%. It's the worst one-day decline ever. The company withdrawing its first quarter in 2022 guidance, citing, quote, heightened uncertainties from Russia's invasion of the UK. It does get about 5% of its sales from Russia, but it's those development centers that it has in Russia, Belarus, Ukraine, Hungary, Poland, as well as India and China. It's trying to get its employees out of there and actually accelerate hiring across Latin America and other areas.
Yeah, and they actually
the world.
said that they actually had to kind of withdraw, basically kind of shut down some operations. Yeah. And there was a good note in one of the Bloomberg stories today about how much business they do with European financial companies and how that could be sort of complicate things given the new sanctions put in place.
Yeah, certainly. Pipitone talked about, right? On their platform.
Exactly. It's getting a lot of attention on Trade Zero America today as well. One certainly to keep an eye on in the coming weeks as well. Let's talk about Philip Morris International. Russia is the 4th largest cigarette market in the world by volume, and for Philip Morris International, about 8% of the company's total tobacco product shipment comes from Russia. But it's also been a standout market for the IQOS platform, that smoke-free e-platform. So certainly one to watch there as well. Finished the day down by close to 4%. And then BP, ADRs of BP down 5% after the company said it would end its alliance with Rosneft and exit Russia effectively.
And BP falling even as oil prices spike higher. And oil prices spike higher even as we think about those tapping of reserves coming from potentially the United States. But so stressed is the market at the moment as to the worry of what happens with Russia's exports from, of course, that particular part of the world. Brent crude pushed up by more than 4%. We're at $98, still off of that $100 high, but still Brent crude currently up at 98, and we see WTI crude up about 5% at $95 as well. That commodity push higher that we've seen across in metals, that you saw across in soft commodities as well, corn and wheat, because of course they're largely coming from Russia and Ukraine, an awful lot of the global supply from those countries. It spills over into the FX market, because when you have global commodities push higher, that is why you see the likes of, well, the Canadian dollar push on the upside, the Aussie dollar do well against the US dollar. Also, though, what's doing well on an FX perspective is the Swiss franc up 0.9%, the Japanese yen up 0.5%. Why? Your haven trade. We are still worried about the leveling up of sanctions and what that means in terms of the response coming from Putin. We're seeing at the moment sovereign bonds, a search for safety happen across the board. German yields in the 2-year bund, 15 basis points higher. French moving to a similar degree. Across the board, a desire to get into your haven trade when it is to the short-term bonds.
You certainly see that, Caroline, here in the U.S. as well. Take a look. These are, again, one-day moves of price higher, massive yield lower, 12 to 14 basis points, pretty much across the curve. And I think, Romaine, this puts into perspective of a 145 on the 2-year that was a 160 just 3 days ago, a 182 on the 10-year that, again, was just 2% a few days ago. And this sort of theme of inflation is still hitting us front and center, despite maybe a hiking interest rates into a slowing growth environment. What that means for stagflation, what it means for a Federal Reserve that still very much needs to act, at least by some market participants, by that 25 basis points in March.
Yeah, and we're actually still getting earnings out, and we want to pivot back to that because some of these are still very relevant to the market. Zoom Video, of course, one of the big pandemic winners, reporting earnings right now. The 4Q numbers, again, this is their fiscal 4th quarter that we're talking about here, coming in above estimates, but they're giving guidance here for 2023, which is basically their fiscal year that they're about to enter into. Here's the numbers. 2023 revenue, $4.53 billion to $4.55 billion. The street was looking for $4.7 3.75. Adjusted EPS, 345 to 351. Street was looking for 4.4. All the other metrics that they're giving with regards to the forecast also coming in light. That's why you're probably seeing the shares slightly weaker here, down about 7%.
But you didn't hear any sort of negativity coming from the CEO. If you dig into the press release, CEO Eric Yuan really saying, look, they're addressing the large opportunity that they say they still expect with customers continuing to transform how they work and engage with their customers. They say they've delivered strong results with total revenue growing some 55%, Carol.
Well, time will tell. Stock's down about 28% already here in 2022. So investors certainly voting differently in terms of how they see the outlook. This is going to be a big week, though, Tim.
Yeah, it certainly is. I do want to go back to Zoom for one moment, just because the stock moving in after hours right now. We are seeing mask mandates removed around the country, and I do wonder to what extent people are actually going to be going back to the office, and to what extent this actual transformation of work is a permanent one, because that certainly will affect Zoom's business.
Yeah, by the way, Zoom also buying back shares about up to $1 billion. So we're also seeing that headline cross.
And still it falls.
Right? Exact. It's down a lot. Still down about 10%. All right, that's going to do it for our cross-platform coverage. Beyond the Bell on radio, TV, and YouTube. We will see you again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, we are, of course, with our TV colleagues, Caroline and Romaine and Taylor, covering a little bit of earnings. A lot going on this week. And, of course, watching 5 days of the Russian invasion of Ukraine. That is obviously our big story. But Zoom getting crushed in the after hours.
Yeah, down about 12%, Carol, as you mentioned, down significantly so far this year, essentially giving up all of its pandemic gains, down, really at the close of trading today around levels last seen in, the beginning of the summer of 2020.
No, it's a really good point. And as Caroline said, I was digging through the press release too. I'm looking for, the outlook it gave was certainly a disappointment, but looking for the company or the CEO or leaders to say, yeah, we're going through a recalibration. That's my word. And, saying that things are different. But they were pretty optimistic in the press release.
What's the signal that a stock buyback sends in this case?
That's the best use of money. Rather than maybe...
We see our stock as a value right now.
Well, it is a good, right? When we see a lot of companies doing that as the stock goes down, it's an opportunity.
Look at Buffett over the weekend, right?
Exactly. That's where he is putting his money to work. But this is a story we see over and over again when it comes to companies. All right, let's get back to world and national news. A lot going on this Monday. Nancy Lyons, she's in our Washington newsroom, our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. The Pentagon says 5 days into the fighting, Russia is facing logistics and sustainment problems. Spokesman John Kirby credits that to determined Ukrainian troops.
They have made it very difficult for the Russians to continue to move ahead. We believe that based on what we know of what their plans were, that they are behind schedule, that they have faced a stiffer resistance than they anticipated.
The Pentagon's John Kirby says Russia has combat power that has not yet moved into Ukraine. He says it's combined arms, and it's not insignificant. Supreme Court nominee Ketanji Brown Jackson is on Capitol Hill today meeting with lawmakers. She's been speaking with Senate Minority Leader Mitch McConnell and with the chair and ranking member on the Senate Judiciary Committee. During a Black History Month event at the White House today, President Biden said Jackson would be an outstanding justice.
She's part of an incredible group of black women who I've nominated to the federal bench. We've nominated more black women to the federal bench than any administration in the history of the United States of America.
Biden also declared Black History Month is more than a celebration. It's a powerful reminder that Black history is American history. Well, the president will be giving his first State of the Union address tomorrow, and Russia's unprovoked invasion of Ukraine has forced him to rip up the script. He's now expected to devote more time to foreign policy and to emphasize the importance of NATO. He's also expected to discuss his economic plans, including legislation to make the U.S. more competitive with China. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. We are pulling in news from all walks of the world. And one story that caught our attention actually crossed the Bloomberg late Friday, but it was on the Bloomberg over the weekend, and we thought we'd bring it to you. And this is we're learning about the pay packages of some of the big financial titans.
Well, before we get to this headline here, let's just go through some of the ones that we've learned about, Carol. David Solomon at Goldman Sachs, Morgan Stanley's James Gorman, they were each awarded about $35 million for their work last year. That doesn't include any dividends. So we're talking tens of millions here. The article that we saw hit on Friday afternoon after the market closed, after we were out of here, Stephen A. Schwartzman at Blackstone, $1.1 billion in pay and dividends just for the year of 2021.
It's the first time that Schwartzman, he's age 75. We've talked to him. I've talked to him on air. He collected more than $1 billion in a year. He generated $941.6 million. That was through dividends from his 19% stake in New York-based Blackstone, according to a regulatory filing that was put out Friday. He also earned $160.3 million from compensation, which is mostly profit tied to funds, on top of a $350,000 salary. This is what, not my view, but what irks some individuals in that when it comes to taxation, right? Income taxes versus investment taxes, they're very different.
They are. And, his personal fortune gives him a ranking, according to the Bloomberg Billionaires Index, Carol, of 33rd in the world. He's got his, close to 1/5 share of Blackstone.
Yeah, it's interesting, the big pay packages that we have certainly seen coming off the last year, when in many ways, we saw incredible earnings growth. We saw a record M&A year. There was a lot of money going a lot of different places, and we were we were coming out of the pandemic. It wasn't a perfect recovery, right? But we continued to heal in many ways. It's not perfect around the world, as we certainly know.
Well, President John Gray, Schwartzman's heir apparent, earned $156.6 million in 2021. That from compensation, an additional $167.2 million from dividends tied to his 3% stake in the firm.
They're all just big packages.
They are.
Bottom line. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
No shortage of volatility in markets today. We finished well off the worst levels of the day. In fact, the NASDAQ became, or turned positive, I should say, as we approached the closing bell. NASDAQ comp today rising about 0.4%. But where the Dow was concerned, a drop of 0.5%. And in the broader market, it was real estate shares leading the S&P down nearly 0.3%. A lot of this risk-off mood was triggered by a series of new sanctions on Russia. We also saw a rally in the crude oil market, WTI, finishing the regular session higher by 4.5%. A concern here, obviously, is about disruption in the flow of Russian crude oil. The countervailing force, though, may be the possible release of crude from strategic reserves. That's the move reportedly being plotted by the U.S. and its allies. Defense-related stocks moved higher. We had Raytheon shares today picking up about 4.7%. After the bell, Zoom Video with a forecast for first quarter revenue below estimates. Those shares now down more than 7.5% in the late U.S. session. A lot of this aversion toward risk resulted in a haven trade. We saw sovereign debt, U.S. Treasuries in heavy demand, 10-year falling in yield terms by more than 13 basis points, 1.82%, and a 2-year Treasury now at 1.44. A lot of conversation that perhaps with the upheaval that we have seen in global markets, maybe the Fed would be less aggressive in its tightening. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. Carol Massar, Tim Stanovic, right here on Bloomberg Radio. So there's a lot going on. You know that. And there's one more important thing to add to your list of concerns, and that is UN scientists warning of a closing window to ready us all for a hotter world. I read this morning, and I was pretty depressed.
Yeah, we'll add it to the list of depressing news that we're hearing today. Yeah. Let's go to Eric Roston, who's sustainability editor at Bloomberg News. He joins us on the phone from New Jersey. When we talk sustainability news, we always go to people like Eric, who's reported on it for so long. Eric, I got to tell you that when we on a day like today, I really feel like this UN report has been lost with everything happening in Ukraine as a result of Russia's invasion. But it also comes at a time when we're talking so much about fossil fuels as a result of that invasion. We're going to get to that in a second. First, give me the takeaways from this UN report that warns of a closing window.
First of all, thanks for having me. It's always a pleasure to join. This is a mammoth report. It's hard to think of any summary more visceral than that of the UN Secretary General Antonio Guterres, who called it an atlas of human suffering. There's no easy way to summarize a 3,600 report, but some of the top line takeaways are climate change is happening. Not only is it happening, it has been happening. The last version of this report came out in 2014, and it was filled with projections about ways that people will need to adapt, impacts we're likely to see. This report is filled with documentation that these things have occurring and are going to get worse. Another big takeaway is, for many years, I don't know, 4 decades, the conversation has been focused on attributing climate change itself to humanity, which of course they've been able to do for half a century. This is the first time that this report has linked impacts to human activity. Like they can trace higher mortality from heat, outbreaks of disease, nutritional deficiencies from agricultural failures. All these things can be attributed to human greenhouse gases. And maybe the last thing before I quiet down here is adaptation is a big part of this report, and it spells out what the world needs to look like and what we need to do in order to make these risks more minimal.
Eric, like Tim said in the beginning, it's interesting this report came out when we are looking at a rally in alternative energy stocks because we've seen BP, we've seen Shell, right, pulling out of Russia. We're seeing a lot of conversations about how Europe and potentially the U.S. are going to ramp up their embracing of alternative energy because of their goals to really, truly be energy independent when it comes to fossil fuels. So I think there's a lot of stuff going on in the world at large. I feel like these warnings, though, have been coming and coming and coming. What is the difference? You did talk about kind of, more specifics in here, and I do feel like they're laying down a timeline that it's very clear that if we don't do something by a certain time, there really is no going back.
There's always work to do. That's clear. That gets lost a lot in headlines that sound scary because they are scary, frankly. But there's always work to do, and the way things have been going, there's always a lot of work to do. I want to answer that question and sort of unify it with your comment before about the war. There's two ways to think about climate change and Russia's invasion of Ukraine in sort of the same sentence. One of them is an extraordinary article that just came out in the last hour or so, in which our colleague Akshat Rathi interviewed the Ukrainian delegate to the big scientific meeting where 195 countries approved this report. And the scientist, Svetlana Krakowska, told him, quote, "Someone could question us that the IPCC is not a political body." Context, sorry, quickly, is she said something to the Russian delegate to this approval convention this week, and the Russian delegate issued an extraordinary apology on behalf of his country for this invasion. So Dr. Krakowska told Akshat, "Someone could question us that the IPCC is not a political body and should only assess science related to climate change. Let me assure you that this human-induced climate change and war against Ukraine have direct connections and the same root. They are fossil fuels and humanity's dependence on them." Very sharp, very powerful words from a climate scientist. And then the report itself has things to say. It's hard to draw a link between climate change and war. They study it. Connections are tenuous. But think of it this way, scientists, they're trying to figure out what the world needs to look like in order to reduce climate risk. And what they've done is they have their models, and they can actually study different kinds of worlds. Running over time here.
That's okay. Eric, we could talk to you for hours, and we highly recommend that everybody look at the coverage by Eric and the team here, the Bloomberg Green team, when it comes to this report and more. Eric Roston, he's sustainability editor at Bloomberg News, on the phone from New Jersey, though, giving us those key highlights.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. We have your buddy over on Quick Take coming up.
I'm surrounded by people from New Jersey.
You are so lucky.
I'm so lucky. Katie Greifeld and Carol Masser.
You grew up in New Jersey, didn't you?
I did, born and raised. Born in Summit, New Jersey.
I love
Overlook
it.
Hospital. Drive past it all the time.
Jersey girls.
The two of you, the love for New Jersey that you have is enough to be ambassadors for the
Rightfully
state.
so.
Yeah, absolutely.
Speaking of love.
Oh, we love Doug Krisner, and we're getting an update from him on how the markets are doing after hours. Hey, Doug.
Tell the producer, Paul Brennan, to cue that Tom Waits song, Jersey Girl.
Aww.
Wouldn't that be nice to listen to about now?
Yes.
What
totally.
a day in markets. Now, a lot of volatility. Pardon me, I was eating lunch here.
It's that kind of day, Doug.
I'm telling you, it's very much. Well, lunch. Who's had time to eat?
Can only
right?
have soup in these kind of situations.
There was enormous volatility today, and a lot of that risk aversion was triggered by a series of new sanctions against Russia. We know that now. The volatility, though, in flow has created some stress in global funding markets, and now there's a lot of conversation around the Fed maybe being a little aggressive in terms of its tightening. Not so much that they would avoid raising rates when they meet next month, but this idea that a 50 basis point hike is on the table doesn't seem to be the case today. We had the 2-year Treasury dropping more than 14 basis points in yield. We're at 143, a 10-year at 181. And in the equity trade, the Dow fell only 0.5%. The S&P 500 down about 0.3% today. And the NASDAQ comp actually turned positive. Then we had some news after the bell. First, Zoom Video forecasting first quarter revenue below estimates. Stock right now is down about 1.5%. We also heard from HP Inc. boosting its annual profit outlook given sustained PC demand. Shares right now better by about 0.4%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
What are you eating, Doug?
That was broccoli.
Not soup. Okay. Nice to know. Doug is a healthy kind of eater. All right, Doug Krisner, thank you so much. So we got to talk about Bitcoin. You actually talked about it in our cross-platform Beyond the Bell coverage.
Yeah, I did something really kind of strange today and over the weekend as well. It was getting crushed yesterday, and I was.
Can we tell people about this strange thing that you did?
No. I did. Bitcoin did something strange.
Oh, okay. I thought you said you did.
No.
I thought you were going to talk about Pilates.
Oh,
I know.
You guys are the worst.
Tim's doing Pilates.
But that's cool. Anyway, Bitcoin. Go
Yeah,
on.
let's go to Bitcoin. It was getting crushed
He's
yesterday.
upset.
I was texting Katie about this, and I was like, okay, Katie, it's going to be terrible tomorrow for U.S. markets because Bitcoin is sort of like gives us this idea of what's going to happen to U.S. equities. But today, that narrative got shattered because Bitcoin surged.
And somehow I feel like it always happens right before our Quick Take show. But that was definitely the case today. I mean, you had Bitcoin as a leading indicator really surging and then bringing the equity market along with it. But maybe, I don't know, not for the right reasons. Because at least for Bitcoin today, there is a specific reason or thought to be a specific reason why Bitcoin was surging.
A fundamental reason?
Perhaps. You had people speculating that perhaps people were flocking to Bitcoin, especially in Russia, as a potential means of payment. And even if they weren't, perhaps speculators were anticipating that they would. And that really shot Bitcoin higher. And what's striking to me is that Bitcoin is up 11%, and you have Ether only up about 8.4%. Typically, that dynamic is reversed. But Bitcoin being the largest, most important cryptocurrency out there, that's where all the flows are going.
Don't you feel like there is a moment around the world, a collective like, whoa, I get this, like why now something like Bitcoin or blockchain would make sense?
Well, this is what Bitcoin and cryptocurrency advocates have been saying. I mean, this is a situation actually where they're saying this is where this blockchain fixes this. Bitcoin fixes this.
Meaning allowing Russian banks to communicate with the outside world, or
just
Russian
Russian
individuals,
Russian individuals. Though that is a concern of the Biden administration that some of these sanctioned individuals and organizations will use cryptocurrency, and you did see the administration ask cryptocurrency exchanges to keep an eye on that.
So is that what we saw? Yeah, we saw that earlier today. Is that what's going on with Bitcoin's price increase today? Is investors are speculating that people will use it to facilitate payments outside of Russia, so the demand for it will go up, so they're buying it?
That is the speculation. Again, not specifically referring to a sanctioned individual there. Just normal Russians. They need, they can't really move around their
Transacting,
rubles.
right?
Yeah, exactly. A means of payment. That is the sort of underpinnings of the speculative rally that we're seeing. It's unclear whether that is actually happening, though I will point out that trading volumes in Bitcoin using the ruble, they're at the highest level since May. So something's going on.
Something is going on. I mean, there's a lot of stuff going on, right? And you do think about, certainly as the financial squeeze is increasingly on Russia, right? There are people who have a lot of money and trying to figure out what they should do with it and kind of where to go. You have spent the day kind of looking at the markets and you're looking at cryptocurrencies. You know, what other interesting kind of trading has gone on among different asset classes that are out there that kind of has caught your attention?
I mean, the move in bonds has
I'll get it out. Sorry, it's been a long day.
It has been a long day. But the move in bonds has been really striking. I mean, if you look at the 10-year Treasury yield, I think down 13 basis points. That's the biggest one-day rally in that benchmark bond since Omicron fears really came to the fore in late November. And remember last week, Carol, I mean, we were saying how there wasn't really that classic haven bid into bonds. You weren't really seeing it. Well,
right.
We found it. It's here. And you definitely saw it today. You saw those most aggressive Fed hikes get paired to.
And we stayed down, which I thought, even amid the volatility in the equity markets, the yields stayed down.
That's what was so surprising. So we saw the yields stay down, but then you saw the NASDAQ actually end in the green today.
Yeah. And it's, I mean, I don't know. People always say that the bond traders are the smart guys in the room. So we'll see.
I've heard people say that.
I heard.
What does
Have
that
I
mean?
said that? I don't know.
Yeah, what does that mean? Like the bond guys went to X schools and
The
equity guys.
The bond market
equity guys were
the
playing
signal that what's really going on.
Equity guys were playing football. Like, what does that mean?
I mean, I've been covering the bond market for a few years. I talk to a lot of bond investors and analysts all the time. They're not the most optimistic bunch.
Bond guys?
Perhaps they
Gals?
could be described as risk averse. That's why they like fixed income payments. So there you go.
Yeah, it's going to be an interesting week between the monthly jobs report, but I am curious how Jay Powell, I almost feel like I know what we're going to get from him, right?
What do you think?
I think he'll address everything and he'll say, we're looking to raise rates.
Yeah.
We know that that's happening, but I think he's going to be very cautious and careful and say, we're going to be, maybe he won't say data dependent, but like Jamie Dimon said, no kidding, we're going to be data dependent.
What
Shouldn't
other
the Fed
type
be
of
data
dependent
dependent?
can you be?
What?
What other type of dependent can you be? Sentiment dependent? Well, that's a type of data.
Okay, Tim, feeling a little bit spicy. I will say, though.
I think it's the Pilates.
It's the Pilates. I will say this is
You
one of
guys
the
are the
last
best.
opportunities that a Fed official, and I mean the man himself, will have to speak before that March 16th meeting, before that March 16th announcement. So if he's going to look to walk back rate hike expectations for a 50 basis point hike, which
Does he
is
need
already, at this point,
Does he need to walk those back?
He probably doesn't need to. That's pretty much been taken off the table, but still people will be listening very closely for any messaging.
We get a CPI report, too, before the FOMC, which I know Mike McKee said that's almost, I think, more important than the jobs report we get on Friday.
Absolutely. CPI, it's the new jobs report. Very exciting.
405,000.
I just bought the T-shirt.
Oh, no.
You're the only one.
No, I think you've got it because you're using it in Pilates class.
Got to work on that core, you guys. All right?
Katie Greifeld, we love you. She's Bloomberg News cross-asset reporter, Bloomberg Quick Take co-anchor, and just fun to have in studio.
Yeah, I don't know if we're ever going to be allowed to do
Her
this
core
again.
is really good, by the way.
All right, let's get to Washington, D.C. for a check of the latest world and national news. Hey, Nancy Lyons.
Thanks, Tim. The first round of talks aimed at stopping the fighting between Ukraine and Russia ended with no agreement except to keep talking, while an increasingly isolated Moscow has run into unexpectedly fierce resistance on the ground in Ukraine. The Pentagon's John Kirby says the Russian attack appears behind schedule.
They have faced setbacks, and they have faced resistance. You got to hand it to the Ukrainians, who have been fighting very hard for their country and making an impact and making a dent on Mr. Putin's abilities.
John Kirby warns, though, Russia still has thousands of additional soldiers and an arsenal of weapons that have not been used. U.S. Supreme Court justices are taking up whether to put new limits on the Environmental Protection Agency's power to tackle greenhouse gas emissions. The EPA under President Obama issued power plant regulations that President Trump canceled. A court of appeals says Trump acted improperly. Bloomberg's Irv Chapman reports on today's arguments.
With the backing of Republican state attorneys general, lawyer Jacob Roth argued for coal companies, saying that EPA is considering...
Should we phase out the coal industry? Should we build more solar farms? Should we restrict how consumers use electricity in order to bring down emissions?
Beth Brinkman for the electric power industry backed EPA, preferring broad standards that allow the company's discretion.
The best system of emissions reduction. It's a benchmark. This is not command and control regulation.
The Biden administration's lawyer noted that EPA is not likely to complete any new rules until next year. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our D.C. Bureau. Carol Master, Tim Stanovic here around our table in our Interactive Broker studio at New York, Bloomberg headquarters in New York City. Don't you love it when criminals are the target?
Yeah. Well, this is a really interesting story.
I'm not saying I like it, but I'm just saying it's always a fun story.
It's like, that's why they do a lot of movies where, you kind of root for, depends on who you're rooting for, right?
Well, and this has to do with ransomware.
Yeah, this is a good story. We talked about cybersecurity stocks a little earlier in the day. Well, one of the world's most successful ransomware groups is reeling from a massive dump of its own internal data after the cyber criminal gang aligned itself with the Russian government.
So, Conti, it's a cyber criminal group that researchers say is based in Russia. It's extorted millions of dollars from U.S. and European companies in recent years, while it provides affiliates around the world with malware that they deploy against victims in exchange for a cut of the ransom payments. And now there's been a data leak.
Yeah, it lays bare, this data leak, unprecedented details of attack infrastructure, Bitcoin addresses, as well as internal conflicts and accusations. It might never have occurred if the ransomware group Conti had chosen to stay apolitical. This according to Alex Holden, who's the Chief Information Security Officer for the cybersecurity firm Hold Security.
What's interesting is, and this is something increasingly we've talked about, right? We know that it is a battle, a military battle, the Russian invasion of Ukraine, and we've been talking about it's day 5, and we are thinking about all of the people in Ukraine specifically who are being impacted, and Russian soldiers. I mean, there's obviously loss of life, and it's tough, to say the least. There's the financial market component, and we've been talking a lot about that, the business component, but part of this conflict, a big part of it is the, cyber war that's going on as well.
Yeah, it's interesting, Carol. Bug US, it's an ETF by Global X that follows a cybersecurity index that's made up of companies that are in cybersecurity. It rallied today. It was up, close to 4%. It finished the day higher because there is concern that the sanctions that have been imposed by U.S. and Europe is going to lead to cyber attacks coming from Russia, so companies will have to buy more cybersecurity software.
Companies have to be thinking about it much more so. You're listening to Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The stock market was down today, but we finished well off the worst levels of the session as the market tried to understand the ramifications of a new series of sanctions against Russia. The volatility in fund flows and subsequent stress that we've been seeing in global funding markets really has served to increase betting on the Fed being less aggressive when it comes to tightening. We've got that March meeting on tap for a while. The market had been speculating on a rate hike of as much as 50 basis points. That seems to be off the table. If you look at today's price action on the 2-year Treasury, the yield was down by more than 12 basis points, right now quoted at 1.43%. In equity market action, we had the Dow weaker by 0.5%. The S&P down a little more than 0.2%, but the NASDAQ comp actually gained 0.4%. Many defense-related stocks moved higher. Raytheon shares were up 4.7%. We heard from Zoom Video after the bell. The forecast for first quarter revenue disappointed. Shares right now weaker by about 4.8% in the late New York trading. WTI crude oil in the regular session popped 4.5% and traded just under 96 the barrel. A lot of concern about the disruption of crude coming out of Russia. Having said that, there is also a countervailing force, and that would be the possibility that we will see a release of oil from strategic reserves. Big move into, as I mentioned, U.S. sovereign debt. 10-year Treasury last quoted at 1.81%. 10-year was down by more than 14 basis points today. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, got it, Doug. Thank you so much. Well, we talked about the UN climate change report earlier with Eric Roston of Bloomberg Green, which details how we are getting to a point where we will be impacting in severe ways various species on this planet. Well, our next guest, Tim, has looked into the incredible sensory capabilities of 13 animals and what we can learn from them.
That is Jackie Higgins, an author and filmmaker for Oxford Scientific Films. She joins us from Kenya right now, and for those who are watching on YouTube, she joins via video, so we certainly appreciate that, Jackie. Jackie, for my whole life, I thought that the 5 senses that we had were sight, hearing, smell, touch, and taste. What are we missing here when it comes to the senses?
So, Tim, lovely to be here, by the way, and thank you for having me.
Great to have you.
Yes, there are many more senses. I mean, scientists, that's an idea that's been handed down the generations since Aristotle. So it's an idea that's almost 2,000 years old. And I think the reason it's stuck is because of its simplicity. It's a very persuasive and easy to understand concept. But nowadays, scientists would say we have perhaps 22 or as many as 33 different senses served by dedicated sensors.
So I think it's interesting, Jackie. As I mentioned, we've been talking a lot about this UN climate change report, and I think it upsets a lot of us that we may be getting to a point of no return. And I do think about the species that potentially could not be with us in, I don't know, maybe it's a decade, maybe it's less, maybe it's a lot more. But there's just so much we can learn by studying the animal life around us. Kind of put your work, your research, your book against that backdrop.
So, I was endlessly surprised by the parallels that I found between us and other creatures. We have this tendency as humans to split ourselves apart from the animal kingdom, but we are animals. And, all of life that we see on this planet is our vast, epic, sprawling, evolutionary family tree. And so it's this notion makes it even more depressing. I mean, it's frankly shocking.
When you think about the senses that we as human beings, haven't been taught or aren't really aware of, what are you talking about here?
So, there's a bit of debate as to what constitutes a sense, for a start. Is it the experience? Is it the sensor? Some scientists would say that because perception is a multi-sensory experience, there's little point kind of divvying up the different senses. But the way in which I did it, or I approached it, is the 5 senses that we know and love actually can be split into fracture. So take sight. Sight is the reason that we see the world is thanks to two sensors on the back of our eyes, on our retina, cones and rods. And cones are marvelous at being able to register the color spectrum. So they give us rainbows, they give us color vision, whereas rods are incredibly sensitive and can detect very low levels of photons. So they enable us to see in the dark. They give us dark vision. And so in that way, sight becomes, I argue, becomes two senses. And I do this with touch as well, that I split touch, although there are many sensors in our fingertips that enable us to kind of, that give us the full feel of the world, the topography, its roughness, whether we're feeling stretching as we put a hand into a glove, a light vibration. All these sensors give us the sense of the topography at our fingertips, the lay of the land.
Jackie, we think about, right? I mean, senses, how it just makes our world as we walk through it just so much richer. But as you say, maybe there's something, as you write about, like with these animals or with animals, certain species, you know, that there's just so much more out there. Are we as humans not tapping into kind of our full array of, you know, senses that are really within us?
I don't think we're giving them credit. I mean, the thing with our senses is that we take them for granted. So it may not be so much that we're not tapping into them, but we're just not noticing them. There's a quote I use at the beginning of the book, a Leonardo da Vinci quote that says, "We look without seeing, we hear without listening, we touch without feeling." And so, what the book encourages the reader to do really is to really involve yourself in the idea of what it means to see, what it means to hear. So I don't think necessarily our body is doing things that we're unaware of.
Is it like being intentional? I mean, I'm a student of yoga, and I think about this whole idea of, you know, just really thinking about what you're doing wherever you are, whenever. And is that what you're getting to? Because I do wonder about people who are listening and say, okay, so what do I need to get out of this? Or, you know, I know we don't all have to be always goal driven, but kind of where does this take us?
Yeah, I think it gives us a lot of gratitude. It is. I also practice yoga, and I do. I think that we are miraculous. We're wondrous, and if we cast our eye and attention to what it is our body's able to do, then there's a huge amount of joy in that, and education, and etc. So yes, I would argue that that's the case.
Hey, I'm wondering, Jackie, if what the coronavirus pandemic and 2 years of dealing with masks and lockdowns throughout the world have done for our senses.
One of the scientists, I mean, one of the senses that I was really surprised by was our sense of touch. And this, the discovery relatively recently of sensors within our skin. You know, we think of space as the last sensory frontier, but our skin here on our body is a sensory frontier. And one of the scientists, Francis McGlone, argues that this touch, you know, other people being next to other people, social grooming, the biological term, is not an indulgence. It's a biological necessity. We need this. We need it for mental health and in ways that science is yet to grasp. So he rails against the demonization of touch. He is fearful of the implications of lockdown. He doesn't think that we've that we've yet to experience what these things have done to us.
Jackie, we've got to run. Forgive us, but Jackie Higgins, we've got to run, but we appreciate the time with you. She's author and filmmaker of at Oxford Scientific Films. Her new book out is called Sentient. Coming up next, Joe Matthew with Sound On. A lot going on, as you know, and he's got it all covered. For Tim Stanovic, I'm Carol Masser. Have a safe evening.